Hey guys, welcome back to Toto Capital. My name's Liam, and in this video I'm going to share with you an extremely profitable swing trading smart money concept strategy. The reason why this strategy is so good is because a lot of people, they're working full time, they're students, or they just don't have enough time within the day to be able to sit down and actually trade a individual session. So for example, the London session or the New York session sat down between 8 a.m. and 10 a.m. or 1 o'clock to 3 o'clock in the afternoon. Okay, so that would take a large chunk of your day. And for a lot of, or the average person, that's not feasible, right? You've got stuff to do, you need to go to work, you're a student, you've got classes to go to. So, sitting down between them times every single day often doesn't work for the average person. So that's why swing trading is so good, is because it allows you to be a lot more passive within the markets. So for example, you only have to check the chart, say 3 times a day for 5 to 10 minutes. That allows you to, to set up your limit orders, and you can act a lot more slowly and methodically within the markets. Because everything's moving a lot more slow, it allows you to be able to gauge your risk, gauge your rewards, and everything's on a lot slower of a pace, which, for someone that's quite new to the industry, that's a very, very beneficial thing to do, because, the last thing you want to be doing is rushing into trades, not calculating risk properly due to the markets moving too quick on a intraday day trading setting. Okay, so without any further ado, let's head over to the charts so I can introduce you guys to this extremely profitable swing trading strategy. Okay, so this is gold on the 4-hour time frame. So primarily, most of your swing trading, some people trade on the daily, some people trade on the 12-hour, but to be honest, for the most part, I prefer the 4-hour time frame. I think it gives you a nice balance between sort of day trading and these extremely higher time frames. So, you're still getting sort of frequent trades, but it's not where it's sort of overwhelming. So I think it's a good balance trading on the 4-hour time frame. So first off, what I want you guys to do is sort of zoom out and look at the market from a higher time frame perspective. Okay, so when you zoom out here, clearly you can see price is moving from bottom left to top right. So just in terms of raw market structure and just in terms of identifying the higher time frame trend, we're clearly sort of making overall higher highs and higher lows. Okay, higher highs and higher lows. So just in terms of raw market structure, clearly the sort of macro trend appears to be to the upside. This is also supported by this black line here, which is the 50 exponential moving average, which basically is just an extra confluence that we use on the charts to help identify a higher time frame trend. Okay, so when price is above the EMA, we're looking for longs. When price is below the EMA, we're looking for shorts. Okay, obviously these are lagging indicators. However, it's just an extra sort of confluence that we can use when executing. So now let's zoom in a little bit. So this is on the 4-hour perspective here. And what you can see is we've broke a fractal to the upside. Okay, so we've broke structure. Whether you take this level here, or whether you take, this level here, it really doesn't matter. It really doesn't matter because, ultimately what we've identified is we've broke structure to the upside very impulsively. How do I know this is an impulsive and an actual sort of real sort of price driven move? Well, it's because of this gray shaded area here, which is a imbalance. Okay, so we've had a very strong push to the upside, creating a fair value gap, creating an imbalance, whatever you want to call it. And that indicates that this is a real move. Okay, this is impulsive. This is a very, very strong move. Okay, so now that we've identified a break of structure, let's mark that on here. So this is a break of structure. Okay, we've identified that. Now what we can do is we can look for an entry. Okay, so our higher time frame bias is of course looking for longs. What we want to see now is a retrace to our Fibonacci level. So we mark that on from swing low to swing high, okay? And we want to see a retracement to, this is what's personal, right? So I personally use the 75% retracement, which gives you a 1 to 3 risk to reward up at the highs, okay? So what we do is we mark on from swing low to swing high, so most recent fractal low to fractal high, and we're looking to get long on this market if price can retrace back to our 75 retracement. However, you can do your own testing, do your own research, and you can find which ratio suits yourself. Okay, some people use a 67% retracement, which I think gives you like a 1 to 2, whereas 75% gives you a 1 to 3 up to the high. Okay, so very, very important to have that mechanical approach, because what that does is essentially takes out the emotion. We're going to enter here on a limit order. We've got invalidation at the swing low, and we're looking to target the range highs. Okay, so let's see. You can see we're triggered in right here. We're triggered in right here. You can see the exponential moving average is actually sloping to the upside now, which is very, very good. It's what you want to see, but also, that matches market structure, what we've identified. Okay, we've identified this break of structure, so it makes sense that the EMA is actually starting to curl to the upside. Okay, so we're triggered in this trade, and you've got to be very patient. These are swing trades, and these can take quite a bit of time to play out. Okay, let's play price on, and you can see a 1 to 3 was hit on this trade. Okay, you've got invalidation here, and you've got targets up at the high. So there's either, there's literally two outcomes. Either we're stopped out, or we hit profit at a 1 to 3 risk to reward. Okay, one thing maybe to touch on here, which I think a lot of sort of new traders or traders who are emotional, they may see this slight drawdown here, and they may actually exit their trade early. They may exit early, right? However, it's important to have clear invalidations and clear targets, because if you close this trade early due to emotions or you're scared of drawdowns, you would have missed out, and you wouldn't have capitalized on this whole move to the upside. Okay, so that's a great long example. Just to recap, what we've got is a clear macro higher time frame trend when you zoom out. Okay, when you zoom in slightly, you've got a clear break of structure with imbalance. We've got a retrace to our 75% retracement, which is our discount, clear invalidation, and clear targets. The reason why we use this Fibonacci retracement as an entry is, often what you find is you've got a order block within this region here. You've got an order block within here. So this is the last down move before the push to the upside, okay? However, using a retracement level takes out all of the emotion and subjectivity revolving around identifying order blocks and, setting limit orders, or, will it trigger here? Will it trigger down here? Nobody actually knows, okay? So, taking a retracement level takes out all of the emotion, and it really gives you a very simplistic approach when you are swing trading. So that's it for this long example. Now let's jump over to a short example. Okay, so this is also gold on the 4-hour time frame. And what you can see, let's just get a macro perspective. When you zoom out a little bit, you can see price is moving from top left to bottom right. So just in terms of a macro perspective, clearly price is heading to the downside. Okay, so that's the overall bias, which is sells on this market. In terms of raw market structure, you've got lower lows, lower highs, lower lows, lower highs, etc. Clear bearish trend. This is what you want to see. Okay, so now let's drop down. So we're on the 4-hour time frame. What you can see is we've broke structure to the downside here with imbalance. Okay, so we broke structure right here. Okay, and you can see we've left an imbalance right here. Okay, so there's an imbalance between this candle that broke, pushing to the downside between these candles. So indicates very strong structure shift to the downside. Now that we've identified the break of structure, what we want to identify is our retracement area. Okay, so swing high to swing low. We're looking for a limit order to be filled right here on the 75% retracement. Stop loss goes at the high here, swing high, target down to the swing low. So that allows us to have a 1 to 3 risk to reward. 1 to 3 risk to reward. So we're triggered in on this trade, okay? We are essentially at this order block right here. You can see this is sort of the last up candle before the sell-off to the downside. So essentially this order block is in convergence with our retracement area, okay? And we also have imbalance to the downside, showing that we have very strong momentum. So we're triggered short in this trade, and let's allow that to play out. You can see this is a very sort of quick example in terms of the 4 hour. The next 4 hour candle literally opens up and drops straight down and tests the low at a 1 to 3 risk to reward. Okay, so not all trades, don't get me wrong, not all trades are going to be like this where, you know, you triggered in and then the next candle just rips down and takes you out at a 1 to 3 in profit. Okay, but you know, it's nice to see when everything lines up, when all of the confluences line up, you can get these very, very fast moving trades. Okay, you can see we did suffer some drawdown. Okay, we did suffer some drawdown here. Price did retrace slightly. And, you know, anybody that tells you that these retracement levels, that price has to respect them, or, you know, these are the golden levels or what have you, they're just, it's all just lies. Okay, you're going to suffer some drawdown, you know, understand that you've got invalidation and you've got your targets as well. So this is a very great example, you know, and just to recap, when you zoom out, you've got your macro perspective, which is sells to the downside. When you zoom in slightly, you've got that strong break of structure with imbalance, retrace to our retracement area, which lines up with the order block. That's where you're triggered on a limit, and then you've got invalidation above the swing high. Okay, so that is it for this sell example on gold on the 4 hour time frame. Hey guys, thanks so much for watching. I hope you enjoyed this video, and I hope this video gave you some very valuable insight on a very profitable swing trading strategy. I think one very important thing just to end with is really, as a trader, the main thing is to not make trading your whole life, right? Trading needs to supplement or at least complement your life, okay? It's sort of an extra curriculum, if you like, okay? So ensuring that you're trading a strategy that fits and suits your lifestyle is extremely important, because, you know, you could go and try and trade the London session every morning, but if you're a student, if you're working full time, you know, that may not fit your life, okay? That may not suit or fit into your life very sort of smoothly. Whereas maybe taking a swing trading perspective, it allows you to be, as I said, a bit more passive. You can take a little bit more of a backseat and allow the markets to come to you, and you can be a lot more patient, okay? Further, let's touch on patience. You know, it's extremely important. With things moving a lot slower, for example, on the 4 hour time frame, these moves can take, you know, hours and hours and hours to play out. They could take a day, 2 days, even up to a week, okay? So it's very important that, you know, if you're making the shift to swing trading, understand the time-based horizon where you're going to be executing, because, you know, you're going to be executing off a limit order, but do you have the time and patience, or at least if you don't right now, understand and try focus on the fact that you're going to need a lot more patience to allow these trades to play out, okay? Unlike a day trading perspective where, you know, you could be in and out of the market within, you know, an hour, 2 hours. These strategies often, you know, swing trading strategies often take, you know, may take 6 hours a day, a week, okay? These take a lot longer to play out, so please bear that in mind as well, okay? So I hope you like this video. Please like, comment and subscribe, and I will see you in the next video. Take care, guys. Bye-bye.